everyone. Thank you for joining us today on TMC Connect. Today we have Rob Henger and Joey Barrow with Home Lending Pal for introducing CRA-Fair Lending Pal, a revolutionary tool to proactively avoid CRA and compliance fines. So Rob, Joey, thank you for being with us today, and we'll go ahead and get started.
Wonderful. Sarah, thank you. Appreciate it.
Yeah, thank you for having us. I'll let Rob, be the speaker on this one because he knows more about the CRA piece of it, and it comes from the banking industry. So,
sounds
all
good.
right, Rob. Well, I hope everybody's doing well. I'm not sure who's on the call, but I had the good fortune of being friends with Joey, Stephen, and Brian, the founders at Home Lending Pal, and they have a product that is called Atlas CRA. And at First Bank in 2017, 2018, we, and I got to be careful on what I say and cannot say regarding audits and things like that at First Bank. So even though I'm not there, I'm going to probably still be a little bit cautious of this. So in 2017 and 2018, we were encouraged to really get serious about our bank's fair lending goals and helping the underserved. So I worked with the folks at CRA Home Lending Pal to develop this this platform that we're going to demo today, or we're going to see today. Really, not demo it, but and it was responsible, I would say, in the 2 years, 2018, 2019, we had roughly a 91% increase in our affordable housing goals. And when I say maybe more specifically, housing equality, narrowing the gap between the white homeownership rates and people of color homeownership rates it's about a 30% gap, and we wanted to do the best we can to narrow that gap, and that should be any banks or any financial institutions affordable housing goals in today's market. So specifically, we identified that our Black and Hispanic applications were, I'm going to say, could be better. Our percentage of applications were not necessarily aligned with the demographics in the community we serve. So we then looked at our pre-qualifications, we looked at our applications, we looked at our closings. So that waterfall of pre-quals to apps to closings, as you progress, the percentage of minority prospects, pre-qualifications, minority applicants, and minority closings didn't represent the demographics of the community. So we wanted to build a tool that would be a proactive solution to assist mortgage companies' fair lending and CRA goals. So if you, and I'm gonna pause for a second here and go back a little bit. Most of you, I'm sure, at financial institutions, banks, and credit unions, you're accustomed to your regression analysis, right? And your regression analysis is exactly that. Someone within your institution, whether it's your mortgage department, your fair lending department, your risk department, somebody is going to be analyzing your pre-qualifications, your applications, and your closing. And they're going to align that based upon your assessment area. And are you serving the demographics of your community? That's a great, that's what banks have to do. But it's a reactive tool, right? It's simply telling you haven't done a great job. It doesn't give you an idea on how to do a good job. So what we set out to build back in 2017, 2018 was a tool to be proactive on assisting the percentage of minority pre-quals, applications, and closings. So that is what Atlas CRA does. I'm gonna, and y'all gonna have to forgive me because I'm not used to doing PowerPoint presentations. So this is probably the first one in years. So I'm going to skip through to the next PowerPoint, if I can figure out how to do that. Slide, there it is. Joey, did that show up?
Yeah, we see it. We're good.
There you go. There you go. All right, good deal. So Home Lending Pal, Atlas CRA, we fundamentally have two products. One is, we're going to go through here today in a minute, Atlas CRA. It's identifying opportunities to improve your pre-qualifications, your applications, and your closings. And in addition to that, we also have our kind of flagship product, if you will, is it's an AI-based home buying and home lending journey. And if for those bankers in the group, and you want me to shortcut that, it's kind of like a pre-POS. If a consumer is not sure if he or she qualifies, or maybe the consumer has spoken with a loan officer and didn't have a good experience, they can come into the Home Lending Pal journey, and they are introduced to a AI bot called Kev, and Kev then guides somebody through the application and will actually assist them in pulling their own FICO score, in pulling their own verification of income and verification of employment, and potentially verification of assets as well. So it's again, I'm going to call it a pre-POS. In various financial institutions that we've worked with so far, these are the banks. We obviously have several IMBs that are customers of ours, but these are the banks that we presently service today. So I wanted to just kind of underscore that. All right, now I'm going to tell you a little bit about what Atlas CRA is, and then I'll probably after that we'll kind of get into some of the statistics with First Bank, and then I'll open it up for questions. So it's a pretty simple product, but again, the results at First Bank were a 90%, so almost 91%, almost a double 100% increase in reaching our fair lending goals in 24 months. So we're going to chalk that up as a successful venture and proof of concept. All right, how does it work? So let's start with this slide here. First off, there is an engine, a website, a portal, call it whatever you want to call it, and we basically connect. We sit on top of LOSs. Today, we're sitting on top of Encompass on all of our applications. We're working on 2 other proprietary LOSs right now, but today on top of Encompass. And we collect this group of data. Now, I've broken it up into 3 sections: required data set, standard additional data set, and optional data set. For those of us that are working at banks, and we are very NPI sensitive, right? We let you select what you want to share with us, and what you share with us is going to outline some of the alerts and communications. So we suggest that you provide either a loan number or a name. And in some cases, we have banks that are perfectly fine with NPI data, and they will provide a full name, borrower's first name, borrower's last name. In some early iterations of the product, we had banks that didn't want to provide that. So we just simply got a first name, and some banks didn't even want to do a loan number. So we can just randomly assign a loan number. And I'll explain that to you in a little more detail here in a minute. We're obviously going to collect the subject address. Those of you that are working with financial institutions and understand your CRA and fair lending goals, you have opportunities to assist consumers, borrowers, applicants in your assessment area and out of your assessment area. So where is that subject address located? So we're going to collect the subject address. We're also going to collect your bank's assessment area, typically by county. Some banks do by FIPS code, but typically by county. I skipped over the applicant's GMI data. So when an applicant applies, and again, I'm going to use the word applicant generically. As everybody on this call knows, we have consumers that will apply for a pre-qualification they give us 5 pieces of information. They don't give us the full, maybe the subject address is withheld or the value is withheld. So I'm going to call that generically a pre-qualification, and an application is when we have a full application. So we're going to collect this required data. So there's 1, 2, 3, 4, 5, 6, 7 pieces of information are required. I'm going to talk a little bit more specifically about what these are. Obviously, you know what your assessment area is. Banks' fair lending goals in geo-targeted areas. So we have a bank we're about to do an implementation on, and they're based in Atlanta. And Atlanta has a high Black population. However, interestingly enough, their regression analysis indicates that they are underserving the Asian population. So that is a specific targeted area within the certain census codes, MSAs. Certain census codes in the MSA of Atlanta, and a specific race or ethnicity that they're trying to improve their applications and their closings. So that would be an example of a geo-targeted area. Often we'll talk with financial institutions that are kind of in the sweet spot or not sweet spot, I shouldn't say that, are not in the boat by themselves, and their applications for Black, African-American applicants and their Hispanic applicants are typically the areas that they want to improve their applications, their closings. Let's see here. So that kind of touches on the geo-targeting, the fair lending, and the census tract data by source. And I'll get into that over here a little bit more. Banks' fair lending goals. So I think we hit that. Let's kind of come down in here. Standard applications current address. There are indicators in our AI-based algorithm that would indicate the probability or the propensity that an individual may or may not support your fair lending goals. As everybody knows here, if the applicant says, I do not wish to disclose my GMI data, then we can make probabilities, propensity scores on the likelihood that they will assist your fair lending goals based upon the subject address and the current address. Typically, and again, this is if you choose, we would have FICO scores, and when we have to develop a propensity scoring or probability scoring, it wouldn't make sense to say to you that this loan is likely to close if the credit score is 500. If your credit box is 620 and the credit score is 621, then it's more likely to help your fair lending goal. So that's pretty self-explanatory. Application income. You notice income is in here, but we are not pairing it up with a social security number, a date of birth, or even a full name. So we want to keep the information as NPI protected as we can. And you'll notice over here, this platform will alert us in real time for home ready and home possible opportunities, as well as CRA. And to do that, we'd need to know the application income or the household income. And of course, in the case of Fannie and Freddie, application income and household income for home ready and home possible are one and the same. And then last but not least, if a bank has a SPCP, a special purpose credit program, and they're trying to bring that product to market and bring opportunities to bear on their loan officers, or the bank wants to participate in our new pilot, a propensity scoring model, then this additional data is included as well. And you'll notice now we are getting into NPI because we have the full applicant's name, loan amount, and obviously we have their income, things like that. All right, that's your data set. That comes out of your LOS, comes into the Atlas CRA engine, and Atlas CRA then from there, and I realize I think I'm pointing my mouse around and I'm probably looking at the presentation screen and not on my screen, so my apologies. So we have the data coming into Atlas CRA engine. Atlas CRA engine is going to produce the results. Now, what are the results? The results are twofold. One, we are bringing 1, 2, 3, 4, 5, 6, potentially 7 7 pieces of data or 7 opportunities over to your LOS and embedding it into your LOS. We have a custom screen in Encompass that we can drop this information in, and then you can create emails and alerts off of that. In addition to that, we also have effectively a kind of a simple CRM built into our platform where we can, when a loan officer, if Joey's the loan officer and Joey gets an application online today at 2 o'clock, that application will come into LOS. It'll come into the LOS, and it will push when that application is saved. When it's put in there, it's triggered, and it comes in Atlas CRA, and Atlas CRA then will evaluate it based upon these opportunities. Is that loan likely to be an opportunity for your bank's CRA goals? Is that loan likely to, or that applicant, that pre-qualification, if they apply, if they are approved, and if they close, are they going to help your CRA goals, your fair lending goals? Do you have specific race and ethnicity opportunities? In other words, in your market, is there specific races or ethnicities that are underserved? Is this property located in your assessment area? Or is it in your REMA area? If it's in your assessment area, then obviously it's impactful to your fair lending and your CRA goals. If it's outside of that, it's still impactful to the community, but is it impactful to your goals? Home ready and home possible, as everybody knows on this call, you have a better execution when a applicant fits home ready and home possible when their income is 80% of AMI, and maybe someday that's going to be 100% AMI. Who knows? But instead of having your loan officer have to go out to Fannie and Freddie's lookup sites, we bring that to you right away and in an email, so that when an applicant applies, if they meet home ready or home possible guidelines, an email goes to that loan officer that says, "Hey, congratulations, that you can quote that person a home ready, home possible rate." Some financial institutions are stepping out there and developing their own special purpose credit programs. And effectively, if you're familiar with that, the CFPB at the end of 2020 basically built a construct where banks can do the data evaluation, due diligence, to determine if there are certain areas within their community that they serve that are underserved from a race and ethnicity standpoint. Are the home ownership rates congruent with the population? And if they're not, then a bank can generate a program. Often the normal program would be, if a property is located in a majority census tract, then often banks will do 100% loan, and in the effort to create housing equality. And then last but not least, we are presently working on a propensity scoring model where, when we have this full data set, we can come back to you, and when an application comes in, we can give you a scoring mechanism on, what is the likelihood that this loan will close and will help your CRA goals, your fair lending goals, your special purpose credit program. So it's a little bit more of a robust package. So that's what propensity scoring is. All right. So this information is pushed back into your LOS. So if you want to create your own communications, your own alerts, great. Or we can push this out to your loan officer. And let me give you an example of that, and then we'll go from there. So here would be, I just made this up. So this would just be an example. If your loan officer's name is John, you can build all this. All this gets built in, right? So they're all meta tags. So you can say, hey, John, at 2:46 today, an application came into the LOS. Congratulations on the preliminary application you just received. Based upon the data, this prospect is likely to be an opportunity for you to assist First Bank in our fair lending goals. There's some banks give their fair lending goals a name. At First Bank, we called it First Bank Forward. And that was just a moniker for giving something identity so that people are aware of it. And this is just an email that would go to that loan officer. Now, why do I show this to you? And so let me transition this a little bit here. What we found at First Bank was we had 100 loan officers, and all of them knew that we should help all people. I don't believe any of them would intentionally or even unintentionally discriminate against somebody. However, it is fair to say that 90% of the mortgage population, mortgage loan officers, are compensated based upon the size of the loan amount. So if you have a $400,000 loan and you earn 1%, you can do the math. If you have a $100,000 loan, you earn 1%, you can do the math. That is a permissible LO comp structure. It's also a structure that is statistically not very favorable upon minority majority census tracts in most low census tracts, mod census tracts, or some minority majority census tracts. So we found that when you bring awareness from the institution level, so First Bank is saying to our loan officers, we care about doing the right thing and helping all people, and we have defined fair lending and CRA goals. For years, we just say that and would do what we could do. When we brought the alerts, the accountability, and oversight to the loan officer, the culture changed substantially. And communications like this gave us a politically correct, good forum to make our loan officers aware of our goals and ask them and hold them accountable to assist in those. In that period of time, that 2-year period of time after we deployed the tool, we found a 91% increase in a 24-month period, 91% increase in our applications and our closings. There's actually 2 different numbers on that, but that'll work for now. And it all really is a part of accountability and oversight and monitoring these opportunities. So I think I've been rambling for a while. Joey, I'm going to take a pause here for a second and let's either open this up for questions or just for a variation. Maybe you can chime in.
Sure. Do you want to let's see if we have any questions first, and then I can chime in.
Sarah, how does can someone can they unmute themselves, or how do we do this?
Yeah, so if anybody has any questions, please go ahead and drop them in the chat. I did drop a note at the beginning. I don't see any questions so far. So anyone on this call, if you have a question, please feel free to drop that in the chat for Rob and Joey, and we can get that answered. Or if you have any questions that you think of afterwards, I did drop Joey's email in the chat, and he dropped his phone number as well. And then we will be sending out a follow-up email with the YouTube recording, the podcast link, and some more information about everything Rob and Joey are talking about today. So you can feel free to reply to that as well, and I can get you in touch with anyone over at the Home Lending Pal team.
Good. How are we doing on time?
We've got about 5 minutes left.
Cool. All right. Well, I got lucky then on the timing.
Well, what I can do is maybe just chime in just a high level, just adding a little to what Rob had shared earlier. We are a high-end lead generation platform where we validate the information that the consumer on the consumer, so that when you get that consumer as a lead, they are a high intent lead. They range from various levels of the funnel, from top of the funnel to all the way to the bottom of the funnel. Bottom of the funnel being fully validated, credits pulled, income, assets, CRA information is available as well, and they can flow right into your CRM. And that's really just kind of high level what we have. The CRA is a great add to Home Lending Pal. I mean, Rob's great partner, Atlas CRA. I think it's going to be really great for us with the banks out there and the credit unions. So we love to see what we can do to assist. Thank you for everybody that attended. Thanks, Rob, for your help. I guess we can just give it another minute for any other questions, and then we can end the call.
And if anybody again, I'm not sure I know how to go into the attendees here, but if anybody out there wants to call me directly, I didn't put any contact information on there. Let me go ahead and what should I do, Sarah? Put it in the chat?
Yes, that would be great.
Uh,
And then I will also share out your guys' contact info in the follow-up email as well.
there you go. All right.
All right, well, I'm not seeing any questions in the chat, but if anybody on the call has any questions, please let any of us know. And thank you everyone for joining us today.
Sarah, thank you very much. And Joe, we appreciate it.
Thanks, everyone.
Thanks, guys.
Thank
Have
you.
a good day and have a good Thanksgiving.
You too.